You certainly know about Bitcoin and maybe even invest in the currency, but do you already know how it was made? What were the difficulties in the beginning, and what was done to make this idea worth trillions of dollars today and is challenging governments and banks? Therefore, in today's video, we will discover the fascinating history of Bitcoin, from obscurity to glory, and what the future holds for this digital revolution. If you want to continue exploring the mysteries and secrets behind Bitcoin and other innovations that are changing the world, subscribe to our channel now to receive more content like this. The story of Bitcoin begins on October 31st, 2008, in the midst of a global financial crisis that was shaking confidence in the traditional banking system. It was in this context that a technical document or white paper entitled Bitcoin, a peer-to-peer electronic cash system, emerged. The author, known only by the pseudonym Satoshi Nakamoto, presented the world with a revolutionary concept: a decentralized digital currency free from the control of banks or governments. In the white paper, Satoshi described a solution to a central problem in the world of digital transactions: double spending. Before Bitcoin, it was difficult to prevent a digital currency from being copied or used more than once without a trusted intermediary. Satoshi's proposal was innovative: a decentralized network based on blockchain technology, in which transactions would be verified by independent participants called miners and recorded in a public immutable ledger. In January 2009, Bitcoin software was officially released as an open-source project, allowing anyone to access it, study it, or contribute improvements. Shortly afterwards, on January 3rd, 2009, the first block of the Bitcoin blockchain was mined, called the Genesis block. This block contained an encrypted message that alluded to the banking crisis. The Times, 3 Jan 2009 Chancellor on brink of second bailout for banks. This message was not only a temporal reference, but also a manifesto about Satoshi's vision to create an alternative financial system immune to the failures and manipulations of central banks. The first Bitcoin transaction was carried out shortly after, when Satoshi Nakamoto sent 10 BTC to Hal Finney, a programmer and early enthusiast of the project. This historic exchange marked the beginning of the practical use of Bitcoin. Even in 2009, Bitcoin had no monetary value on the market, being basically a technical experiment. The first people to adopt Bitcoin were mostly cryptographers, developers, and decentralization enthusiasts. They mined the currency on their personal computers, as the process was still simple and affordable. However, Satoshi Nakamoto's anonymity remains one of the greatest mysteries in technological history. In 2010, he stepped away from the project, leaving development in the hands of the growing community of collaborators. To this day, it is not known whether Satoshi was a person or a group of people, but his creation had already planted the seed of a financial revolution. After the creation of Bitcoin, the first years were marked by the consolidation of its technical base and the construction of a community of enthusiasts and developers. Although it was a revolutionary idea, initial adoption was slow, with little attention outside crypto and technology circles. The first year: experiments and tests. In early 2009, Bitcoin was primarily used as a proof of concept. Mining Bitcoins was still a simple process, and any home computer could participate in the network. During this period, people mining Bitcoin did so mainly out of curiosity or a desire to support the development of a decentralized technology. There was little expectation that digital currency would acquire real value. Early participants in the network tested transactions against each other to verify the security and functionality of the system. Among the pioneers was Hal Finney, a programmer and cryptographer who had previously worked on privacy systems. Finney became one of Bitcoin's leading advocates, carrying out one of the first transactions with Satoshi Nakamoto and helping to improve the software. The first purchase, the birth of a market. On May 22, 2010, an important milestone for Bitcoin occurred, the first recorded commercial transaction. A programmer named Laszlo Hanyecz bought 2 pizzas for 10,000 BTC, marking the beginning of the use of Bitcoin as a form of payment. At the time, the value of these coins was insignificant, but the event highlighted that Bitcoin could have practical uses outside of testing. This moment, known as Bitcoin Pizza Day, symbolizes the beginning of Bitcoin's recognition as a medium of exchange. Interestingly, these 10,000 coins would be valued at billions of dollars years later, showing the exponential growth in Bitcoin's value. Emergence of the first exchanges. As more people became interested in Bitcoin, the need for a system to buy, sell, and exchange the currency arose. In 2010, BitcoinMarket.com, the first Bitcoin exchange, was launched, allowing users to exchange the cryptocurrency for US dollars. Shortly afterwards, in July of the same year, Mt. Gox was created and quickly became the largest Bitcoin trading platform. These exchanges facilitated access to Bitcoin for people who did not have the technical knowledge to mine, helping to expand its user base. Additionally, they began to establish a market price for Bitcoin, which went from less than a cent to around 0.008 in July 2010. Community growth. The technical community around Bitcoin was growing rapidly, fueled by forums like Bitcoin Talk, created by Satoshi Nakamoto. In this space, early users discussed technical improvements, possible uses and strategies to increase adoption. The collective vision was that Bitcoin had the potential to transform the global financial system. Although most users were focused on Bitcoin's technical and philosophical development, some people began to realize its economic potential. Niche investors began accumulating large amounts of Bitcoin, anticipating that its value would increase as the technology became more popular. The role of Satoshi Nakamoto. Even as the network grew, Satoshi Nakamoto remained a mysterious and reserved figure. He continued to interact with the community, fixing bugs in the software and proposing updates. However, in 2011, Satoshi announced his departure from the project, stating that Bitcoin was in good hands. He passed leadership to developers like Gavin Andresen, who became one of the main people responsible for the project's continuity. Satoshi's departure consolidated Bitcoin as a truly decentralized project, without control from a single entity. However, its absence also left open questions about the long-term vision for Bitcoin and the identity of its creator. End of 2011, first challenges. Bitcoin has begun to face its first significant challenges. On the one hand, there was growing interest from small businesses and individuals who used Bitcoin for daily transactions or as a speculative investment. On the other, concerns were raised about the use of Bitcoin in illicit activities, especially on the dark web, where platforms such as Silk Road accepted Bitcoin for anonymous transactions. Even so, the technological base proved resilient, and Bitcoin continued to attract enthusiasts and developers. At the end of 2011, Bitcoin was worth about $5, and its journey as the pioneering cryptocurrency was just beginning. In the years 2011 to 2013, Bitcoin began to gain more attention outside of technical circles and began to attract a wider audience. This period was marked by the emergence of new cryptocurrencies, the diversification of use cases, and the first major increase in price, establishing Bitcoin as an emerging asset. The emergence of altcoins and market evolution. As Bitcoin grew, it inspired the creation of other cryptocurrencies known as altcoins. The first of them, Namecoin, emerged in 2011 as an attempt to create a decentralized domain registration system. Other coins, such as Litecoin and Ripple, have begun to explore different use cases and technological optimizations, helping to diversify the crypto ecosystem. The emergence of altcoins also highlighted Bitcoin's limitations and challenges, such as its scalability and transaction speed. However, they ended up strengthening the market, creating alternatives and generating more interest in blockchain-based technologies. First price boom. The value of Bitcoin remained relatively low until the end of 2012. However, in 2013, there were a series of events that triggered the first significant boom in price. Adhesion of speculative investors. Investors began to see Bitcoin as a unique opportunity for financial return. Trading platforms such as Mt. Gox have made it easier to buy and sell Bitcoin, attracting more capital into the market. Economic crises, events such as the banking crisis in Cyprus in 2013, reinforced the appeal of Bitcoin as an alternative to the traditional financial system. During this crisis, citizens faced limitations in withdrawing money, and many began to look to Bitcoin as a way to protect their assets against government controls. First, institutional investments. Small investment funds have started buying Bitcoin, highlighting its potential as an emerging asset class. These factors led to the price of Bitcoin surpassing the $1,000 mark for the first time in November 2013, generating enormous interest from new investors. First, security problems. Bitcoin's rapid growth has brought with it significant challenges, especially when it comes to security. In 2013, several smaller exchanges suffered hacker attacks, resulting in losses for users and questions about the security of cryptocurrencies. Despite these problems, the community continued to develop improvements to the network. One example was the implementation of updates to the protocol to increase transaction security and reduce vulnerability to attacks. The role of Mt. Gox. The Mt. Gox exchange, which processed more than 70% of all Bitcoin transactions in the world, played a central role in popularizing the currency. However, its operation was far from robust, and management problems began to appear. Although Mt. Gox was still considered a major force in the market, the failures that would lead to its collapse in 2014 were already showing signs. Collapse of Mt. Gox and security lessons. At the beginning of 2014, Bitcoin faced one of the biggest crises in its history, the collapse of the Mt. Gox exchange. Responsible for processing more than 70% of global Bitcoin transactions, Mt. Gox collapsed after claiming that a hacker attack had stolen around 850,000 BTC, valued at the time at hundreds of millions of dollars. This event generated great distrust in the market and caused a sharp drop in the price of Bitcoin, which plummeted from approximately $1,000 to less than $200 in 2015. Despite this, the crisis also brought valuable lessons, leading to the strengthening of security practices on exchanges and increased awareness of the need for secure storage, such as offline wallets. First steps in regulation. During this period, governments began to pay more attention to Bitcoin, exploring regulations that balanced innovation and control. Some of the main events include United States in 2015, the Commodity Futures Trading Commission, CFTC, classified Bitcoin as a commodity, bringing greater regulatory clarity. New York introduced BitLicense, requiring specific licenses for companies operating with cryptocurrencies. China. Despite a rise in the use of Bitcoin as an investment, China has tightened restrictions, banning financial institutions from dealing directly with cryptocurrencies. Europe. European Union countries have begun to adopt a cautious stance, while some nations such as Estonia have embraced blockchain innovations. Latin America. In regions with unstable economies such as Venezuela and Argentina, Bitcoin has gained popularity as a hedge against inflation and exchange rate control. despite facing government resistance, adhesion by companies and institutions. Despite regulatory and technical challenges, large companies have begun to recognize Bitcoin's potential. Between 2014 and 2016, some notable organizations that began accepting Bitcoin as a form of payment include Microsoft, allowed the use of Bitcoin for purchases of games, applications, and other digital products. Dell, one of the first major hardware manufacturers to accept Bitcoin. Expedia introduced the option to pay for hotel reservations with Bitcoin. This corporate support helped improve the cryptocurrency's reputation, demonstrating that it was not just a speculative asset, but also a legitimate means of exchange. The expansion of infrastructure and ecosystem. During this period, the Bitcoin ecosystem began to professionalize. New exchanges, such as Coinbase, have gained prominence for offering greater transparency and security, attracting retail and institutional investors. Additionally, ancillary technologies have begun to emerge, such as the development of more accessible digital wallets for everyday users and the popularization of Bitcoin ATMs in several cities around the world. Technical innovations and internal disputes. As Bitcoin expanded, it also faced challenges related to scalability. The growing popularity of the network has brought concerns about the time and cost of transactions. In 2015, heated debates emerged within the community about how to deal with these problems. The main proposals involved increasing block size. Some argued that increasing the limit to 1 megabyte per block could solve congestion problems. Off-chain solutions, others advocated for solutions like the Lightning Network, which processes transactions outside of the main blockchain to reduce load. These disputes laid the groundwork for future conflicts, including hard forks. Price and confidence recovery. After a long period of decline, Bitcoin began to recover in 2016. The value went from around $200 in 2015 to over $700 in late 2016. This recovery was driven by increased institutional adoption. Investors and funds have started to include Bitcoin as part of their diversification strategies. Preparation for the 2016 halving. The second Bitcoin halving took place in July 2016, halving the reward for miners and decreasing the issuance of new Bitcoins. This event generated expectations of rising prices due to lower supply. Growth in developing countries. In emerging economies, Bitcoin began to be used as an alternative to the traditional financial system. In Africa, startups began exploring Bitcoin to facilitate international remittances, while in Venezuela and Argentina, citizens used cryptocurrency to protect their assets amid hyperinflation. Bitcoin as digital gold. Although Bitcoin was originally conceived as an everyday currency, it began to be increasingly perceived as a store of value, similar to gold. This narrative was driven by the limited supply of 21 million Bitcoins, which made it a potential hedge against inflation. From 2017 to 2018, Bitcoin went from a relatively unknown asset to the center of global attention. It was during this period that cryptocurrency reached historic price records and attracted millions of new investors. However, the boom also brought significant challenges, such as speculative bubbles, stricter regulations, and internal divisions. The first big rise, Bitcoin at $20,000. The year 2017 marked Bitcoin's first major bull run. At the beginning of the year, the price was around $1,000, and by the end of December, it had soared to almost $20,000. This impressive appreciation was driven by several factors. Adoption by retail investors. The ease of access to Bitcoin through platforms like Coinbase attracted millions of new investors looking for quick profits. Expansion of the cryptocurrency market. Altcoins such as Ethereum, Ripple and Litecoin have also experienced high appreciation, bringing more attention to the sector. Introduction of Bitcoin futures. In December 2017, CME Group and CBOE Global Markets launched Bitcoin futures contracts, giving the asset more legitimacy and allowing institutional investors to participate in the market. The ICO mania. In parallel with the rise in the price of Bitcoin, 2017 was also the year of the boom in initial coin offerings, ICOs. ICOs were a form of blockchain-based crowdfunding where startups launched new cryptocurrencies to finance projects. In many cases, these campaigns have raised millions of dollars in a matter of hours. Although some ICOs were legitimate, many were scams or poorly conceived projects which damaged the market's reputation. Regulatory authorities such as the SEC, US Securities and Exchange Commission, began investigating these practices, resulting in the closure of several companies. Internal divisions, Bitcoin's hard fork, disputes over how to improve the network's scalability culminated in an important event in August 2017. The hard fork that gave rise to Bitcoin Cash, BCH. This new cryptocurrency increased the block size from 1 MB to 8 MB, promising faster and cheaper transactions. While traditional Bitcoin maintained its position as the largest cryptocurrency, the emergence of Bitcoin Cash highlighted divisions within the community. Other smaller forks have also emerged, such as Bitcoin Gold and Bitcoin Diamond, but have had limited impact. Speculative bubble and 2018 collapse. The rapid rise in the price of Bitcoin was accompanied by speculative euphoria. Many people bought cryptocurrencies without fully understanding the technology or risks, expecting quick profits. However, in early 2018, the market collapsed. The price of Bitcoin fell from nearly $20,000 in December 2017 to around $6,000 in February 2018. Other cryptocurrencies have also lost much of their value, with many disappearing completely. The speculative bubble has drawn criticism from economists who have compared Bitcoin to classic bubble schemes such as the tulip bubble of the 17th century. Increased global regulation. The 2018 collapse attracted increased attention from governments and regulators. Many countries have started to implement laws to protect investors and prevent financial crimes. Some of the main initiatives were China, ban on ICOs and domestic cryptocurrency exchanges. United States, the SEC stepped up investigations into ICO fraud and began regulating token offerings as securities. Europe, EU regulators discussed ways to standardize cryptocurrency oversight across the bloc. Although these regulations initially scared investors, they also brought greater credibility to the market in the long term. The resilience of Bitcoin. Despite the drastic drop in prices, Bitcoin has shown its resilience. Infrastructure continued to expand, with advances such as Lightning Network, a second-layer solution to increase scalability and reduce transaction costs, which began gaining traction in 2018. Increased institutional adoption. Companies and hedge funds have begun exploring Bitcoin as a store of value, even amid volatility. Global impact. Although Bitcoin faced a bear market after the collapse, it gained unprecedented global recognition. Millions of people in emerging countries have started using Bitcoin as an alternative to the traditional financial system, especially in regions with high inflation or limited access to banking services. Conclusion of the period. Between 2017 and 2018, Bitcoin went from a niche asset to the center of global attention. Despite sharp declines, this period consolidated its position as the leading cryptocurrency and laid the foundation for its future growth. The period from 2019 to 2020 marked a phase of maturity for Bitcoin. After the extreme volatility and speculative bubble of 2017-2018, cryptocurrency began to be perceived more seriously, especially by institutional investors. This period was characterized by technological advances, greater acceptance of Bitcoin as a store of value, and the impact of the 2020 halving. Gradual recovery and relative stability. After the market collapse in 2018, the price of Bitcoin began to gradually recover in 2019. At the beginning of the year, the price was around $3,500, but ended the year close to $7,000. This recovery was accompanied by an increase in investor confidence as the market matured. Although volatility was still present, price movements began to be driven less by rampant speculation and more by increasing adoption and development of infrastructure. Technological advances. Bitcoin's technical infrastructure continued to evolve, notably Lightning Network. This second-layer solution gained more adoption in 2019 and 2020, enabling faster and cheaper transactions outside of the main blockchain. Companies like Bitfinex have started to integrate it into their platforms. Improvements in wallets and exchanges. The digital wallet ecosystem has become more accessible, with user-friendly interfaces and improved security features. Exchanges have also adopted more robust security and regulatory compliance practices. Growing institutional interest. One of the most important factors of this period was the increase in institutional interest in Bitcoin. Several events boosted this trend. Corporate investment. Companies like MicroStrategy have started adding Bitcoin to their balance sheets as a store of value. MicroStrategy, led by Michael Saylor, invested more than $1 billion in Bitcoin between 2020 and 2021, citing the cryptocurrency as a hedge against inflation. Adoption by investment funds. Funds like Grayscale Investments have attracted billions of dollars in assets under management, creating financial products that have made Bitcoin accessible to traditional investors. Expansion of payment services. Platforms like Square and PayPal have integrated Bitcoin, allowing millions of users to buy, sell, and hold cryptocurrencies directly. Impact of the 2020 halving. In May 2020, the third Bitcoin halving took place, a scheduled event in which the reward per block mined was reduced from 12.5 BTC to 6.25 BTC. As in previous halvings, this event reduced the issuance of new Bitcoins, increasing the perception of scarcity. Historically, halvings have been catalysts for price increases, as reduced supply combined with growing demand creates favorable conditions for appreciation. After the 2020 halving, the price of Bitcoin began to rise significantly, surpassing $10,000 in the following months. Impact of the COVID-19 pandemic. The COVID-19 pandemic, which began in 2020, has had a profound impact on the global economy and the cryptocurrency market. Increased digital adoption. With the acceleration of digitalization during the pandemic, interest in alternative financial technologies such as Bitcoin has increased significantly. Global economic measures. Central banks around the world have implemented economic stimulus packages and lowered interest rates to near zero. This has increased fears of inflation and devaluation of fiat currencies, strengthening the case for Bitcoin as a store of value. Search for haven assets. Investors sought alternative assets, such as gold and Bitcoin, to protect their assets. This resulted in an increase in demand and appreciation of the cryptocurrency. Regulatory recognition and global expansion. While regulation remained a challenge, 2019 and 2020 brought advances in Bitcoin recognition. In the United States, the Securities and Exchange Commission, SEC, and other agencies have begun to establish clearer guidelines for the cryptocurrency sector. In developing countries such as Nigeria and India, Bitcoin has gained popularity as a tool for remittances and protection against capital controls. Furthermore, the increase in the use of stablecoins such as Tether, USDT, has facilitated the entry and exit of capital into Bitcoin markets, contributing to greater liquidity. Preparation for the next discharge cycle. By the end of 2020, Bitcoin was widely recognized as a legitimate financial asset. Its price surpassed the $20,000 mark in December, marking the beginning of a new bullish cycle. Growth was driven by the confluence of factors such as institutional adoption on the rise, the impact of the halving, increased market confidence amid global economic uncertainty. The period from 2021 onwards has cemented Bitcoin as a widely recognized financial asset, while also bringing to light challenges such as extreme volatility, environmental issues, and increased regulatory scrutiny. This was a pivotal moment for Bitcoin as it transitioned from a speculative niche to an asset class that attracted both institutional investors and governments, reaching historical records. In 2021, Bitcoin started the year with an impressive rise in value, surpassing $30,000 for the first time in January. In April, the price reached an all-time high of $64,000, driven by expanded institutional adoption. Companies like Tesla have announced large purchases of Bitcoin, with Tesla acquiring around $1.5 billion worth of BTC and, for a brief period, accepting the cryptocurrency as payment. Investment funds and asset managers, including Fidelity and BlackRock, have begun exploring Bitcoin as part of their portfolios. Expansion of crypto services. Payment platforms such as PayPal and Visa have integrated Bitcoin-related services, allowing consumers to buy, sell, or use Bitcoin directly. Search for hedge against inflation. Amid the COVID-19 pandemic and expansionary monetary policies of central banks, Bitcoin has been widely promoted as a hedge asset against the devaluation of fiat currencies. Environmental challenges. In 2021, Bitcoin faced increasing criticism over the environmental impact of its mining. As the mining process consumes large amounts of energy, the Bitcoin network has been accused of contributing to large-scale carbon emissions. Notable events include Tesla. Although it initially adopted Bitcoin, Elon Musk announced that the company would stop accepting the cryptocurrency as payment due to environmental concerns. Global discussions. Attention to the environmental impact of mining has led to discussions about the transition to renewable energy sources and the adoption of more sustainable alternatives, such as networks that use the proof-of-stake mechanism. El Salvador and Bitcoin as legal currency. A historic milestone occurred in September 2021 when El Salvador became the first country to adopt Bitcoin as legal tender. The government has introduced the use of digital wallets such as Chivo Wallet and installed Bitcoin ATMs across the country. Despite being an innovative initiative, the project faced internal and international criticism due to the volatility of Bitcoin and the lack of adequate infrastructure. Volatility and market cycles. Volatility continued to be a central characteristic of Bitcoin. After reaching a historical record of $69,000 in November 2021, the price plummeted significantly in 2022, reflecting the typical high and low cycle in the cryptocurrency market. Reasons for the fall: monetary tightening by central banks, such as the Federal Reserve from the US. The bankruptcy of large players in the crypto sector, such as FTX, generating panic in the market. Nevertheless, Bitcoin continued to attract long-term investors who see the asset as a value reserve. Expanded adoption in emerging countries. Bitcoin has gained popularity in countries with unstable economies, such as Turkey, Nigeria, and Argentina. These countries face problems such as high inflation, capital controls, and local currency devaluation, making Bitcoin a viable alternative to protect heritage and facilitate international remittances. Technological advances and scalability. The technology underlying Bitcoin continued to evolve. Lightning Network. In 2022 and beyond, this off-chain solution saw an increase in adoption, allowing almost instant transactions with low rates. Taproot. Introduced in 2021, this technical update improved the privacy, efficiency, and functionality of smart contracts in Bitcoin. Global regulation. Regulation has become a central theme in the cryptocurrency sector. Many governments have sought to balance innovation with the protection of investors and the prevention of financial crimes. Examples include United States, discussions on how to classify Bitcoin, such as commodity or securities, and imposition of tax rules. China, total mining and cryptocurrency use, leading miners to migrate to other countries. Europe. The European Union has advanced with standardized regulations such as MiCA, Markets in Crypto Assets Regular. Bitcoin in 2025, consolidated present. By 2025, Bitcoin has consolidated its position as the largest cryptocurrency in terms of market value. He remained a recognized value reserve, especially in times of economic uncertainty. However, its function as a means of payment was still limited due to volatility and transaction costs. Bitcoin's future presents a combination of challenges and opportunities as cryptocurrency evolves towards global adoption and deals with technical, regulatory, and environmental issues. Although there are uncertainties, Bitcoin remains the main cryptocurrency in the world, with an important role in the development of the blockchain sector. Institutional adoption and global recognition. The institutional interest in Bitcoin is designed to grow, especially in times of global economic instability. Large funds, banks, and corporations are increasingly interested in integrating Bitcoin into their financial strategies, both as a reserve asset and a form of payment. Greater banks' participation. Global banks can offer Bitcoin custody and negotiation services, meeting the growing demand for exposure to cryptocurrencies. Solutions such as Bitcoin ETFs, already approved in some markets, should expand, making the asset more accessible. Integration in traditional financial systems. Payment networks such as Visa and MasterCard should continue to develop infrastructure for Bitcoin payments. In emerging countries, Bitcoin can consolidate itself as an essential mechanism for international remittances and financial inclusion. Resolution of environmental challenges. One of the most urgent issues for the future of Bitcoin is environmental sustainability. Proof of work-based mining consumes huge amounts of energy, generating global concerns. Possible solutions include transition to renewable energy. Many miners are already migrating to renewable energy sources such as hydroelectric, solar, and wind power. Government incentives can accelerate this transition, reducing carbon emissions associated with mining. Technological innovations. Research on improvements in the mining algorithm can help make Bitcoin more efficient. Alternatives, such as the adoption of a hybrid model between proof of work and proof of stake, though controversial, have been discussed. Scalability and usability. For Bitcoin to become widely used as currency, scalability needs to continue evolving. Development solutions include Lightning Network. This second-layer network is expected to expand, making it possible to process millions of transactions per second with minimum rates. Companies and governments can be part of Lightning Network for microtransactions, especially in areas with low bank penetration. Protocol updates. Continuous Bitcoin blockchain improvements can increase privacy, efficiency, and functionality, allowing more complex use cases such as intelligent contracts. Regulation, balance between control and freedom. Regulation will play a crucial role in the future of Bitcoin. Global governments and institutions are working to create structures that balance technological innovation with protection against financial crimes and excessive speculation. Adoption by governments. Additional countries can follow El Salvador's example and adopt Bitcoin as a legal currency, especially in emerging economies. Governments of developed countries may include Bitcoin in their national reserves as part of diversification strategies. Global standardization. Organizations such as the International Monetary Fund and the G20 are discussing the creation of standardized cryptocurrency rules, including Bitcoin. Clear regulations can attract institutional investors, bringing greater liquidity and stability to the market. Competition and innovations in the crypto sector. Although Bitcoin is a pioneer and the largest market value cryptocurrency, faces increasing competition from innovative projects such as Ethereum, Solana, and other platforms that offer additional features such as smart contracts. To maintain your leadership position, Bitcoin must continue to evolve technologically. The community and developers need to work together to ensure that it remains relevant amid the rapid evolution of the sector. Narrative as a value reserve. Bitcoin will probably continue to be seen as digital gold, especially for its limited offer of 21 million currencies. This narrative positions him as an inflation protection and an alternative to traditional assets in times of economic crisis. Digitization growth and distrust in the traditional financial system can strengthen Bitcoin's appeal. Central banks that explore digital currencies, CBDCs, may indirectly increase Bitcoin acceptance as a decentralized alternative. Scenario for 2030 and beyond. Massive adoption. Bitcoin can become part of the daily life of billions of people, especially in regions where the traditional financial system is inefficient or inaccessible. Universal recognition, greater integration with global financial systems, and clearer regulation can position Bitcoin as an indispensable asset. Continuity of volatility. Despite advances, Bitcoin volatility may persist, especially in speculative cycles. Bitcoin's future will depend on its ability to continue innovating, facing challenges such as sustainability and regulation, and maintaining its position as an asset leader in the cryptocurrency industry. Although there are uncertainties, the impact potential on the global financial system remains huge.